Obviously, that's a personal opinion in terms of how I see the market. To sort of give a sense in terms of what our thought process are, and you have to block all the noise and look beyond to see how things are. And that's how the smart money does. They sort of block out. They look at past this as to what the world will be, and sort of start positioning yourself to take advantage of that opportunity. So this is for people that are unfamiliar with SmartCrowd. Most of you guys are familiar with SmartCrowd. We're the first regulated platform that has enabled micro investments into real estate, into private real estate. We're registered here in the DIFC, regulated by the DFSA, supported by some regional and in some cases global leading investors who have funded us, as well as have won numerous awards for our innovative product that we brought onto the platform. But there's a couple of things I want to highlight over here before Hassan cuts me off. Yes, we allow people to make smaller investments into real estate. But what does that mean, right? Like, why is that important? Allowing someone to put 5, 10, 15, 20,000 dirhams into a property and own a piece of property. It's very important to understand the context behind that. Yes, it's a great option for many people, but not understanding as to why that is important is a missed opportunity. So I'm going to take a few minutes to sort of give my point of view in terms of why I think that is very critical, why it's important. So as Hassan mentioned, I'm a finance geek, right? I'm a CFA charter holder. So, when I came up with the concept of SmartCrowd, I was looking purely from a portfolio perspective, like an investment portfolio construction perspective. Any optimal investment portfolio should be well diversified so you can mitigate any risks of your investments. But when you think about it, an average person like myself, who's not very wealthy, etc., we've been traditionally restricted to 2 asset classes where we can invest in, mainly stocks and bonds, because those are kind of asset classes we can afford in a way we can diversify our investment. Real estate is a notoriously very expensive asset class, requires a lot of capital and a lot of work to acquire an asset. So, and even if you are able to do so, it becomes an extremely concentrated part of your portfolio, which is also not great because you have so much concentration risk that if you were to invest in a bad market or a bad asset and so forth, that could have a detrimental effect on your personal wealth. So that doesn't make sense. And for some people, that becomes even worse, is a leverage investment, meaning you're borrowing money to buy that real estate. So instead of diversifying and mitigating your risk, you're adding risk to your portfolio. And that didn't make sense to me as a financial professional. So that's when the idea came of making it a better option for people to get access to this asset class, because there's a lot of research and data that shows having alternative assets, tangible assets such as real estate, and adding that to one's portfolio really increases the return profile of that portfolio vis-a-vis the risk within that portfolio. Meaning for every unit of risk, you're able to generate more returns by adding these alternative assets to your investment portfolio. And that's for a couple of reasons. One, because it's a less volatile asset, it doesn't move a lot. And second, it provides you a steady flow of income. So the idea was to bring that level of portfolio construction away from just the wealthy who have the money to buy properties as well as invest in stocks and bonds, to an average person where they can really construct a portfolio that allows them to, better their financial health by being able to better manage their risk and increase their ability to take risk so they can grow their wealth. And that's the key element as to why allowing you to invest small amounts of money into real estate is so important. So you really need to leverage that using the platform. So we don't say that you should invest in real estate using SmartCrowd and forget all other investments. Absolutely not. You should continue to invest into other asset classes such as stocks and bonds, but you should really sit down and look at your portfolio, how much you have, how much you need to allocate into real estate. And then within that, the beauty of our platform is you can get further diversification. So it's not like you're putting 20,000 dirhams into one property. You can spread that out across 3-4 properties. So that's the real powerful. This is how the wealthy do it. Only the difference is the wealthy are doing it one full property at a time, whereas we're bringing that same level of portfolio construction at a micro level. And I think it's quite powerful if done appropriately. So that's the idea, and we want to give people more and more opportunity to take advantage and sort of level the playing field. So if you've seen any of my videos on YouTube and so forth, I talk about, leveling the playing field, bringing, sort of making a dent in this income inequality. And one of the things that we launched last year was this beta product called SmartCrowd Plus. And essentially, what SmartCrowd Plus does is it gives your 10,000 dirhams the same purchasing power of someone with 1 million dirhams in the market looking for good assets. And the way we do this is by all of you coming together. I think there's like 60 people in this chat room, right? So if all of us put 10,000 dirhams each, all of a sudden we have a massive purchasing power, and we can be very aggressive in the market and get some really good deals, as opposed to you individually going with 10,000 dirhams in the market trying to find a good real estate deal. It'd be very difficult. So by having this product, what it has enabled us is to go into the market and really find attractive deals with cash in hand, so we can be more aggressive in terms of our negotiation. And we sent an email out a few weeks ago, just before we launched our other 2 properties on SmartCrowd Plus on our platform, to show you in terms of what our track record has been in terms of these assets. So you can continue clicking through. Yeah. So one of the things was, we were looking at International City, and if I remember correctly, this was just around the turn of the year, and the market had really picked up. There was a little bump in the market in I think it was January time, and International City prices really accelerated, and we were unable to find something within that price point, but we were able to find something similar in Rimram at a better price. So, even though we'd raised capital for International City, we found an opportunity, and we passed that opportunity to the investors, and they picked it up, and that asset is performing quite well. We did one in Marina, looking for a target to get a property to provide a 6.5% return. In fact, we actually ended up finding something that was providing better returns, of a better quality asset, and better quality tenant. There's many examples of this as well too. Do we have more in there? This is the most recent one that we did, SC118, where we were looking for a 1-bedroom or a studio in the price points of 450 in JLT, and we were able to find a really good 1-bedroom property. We got this 430, and I think the valuation for this property came at 475. What does that mean, right? What that means is, we very much focus on the entry point to get us a good price. That does a couple of things. One, it protects you from another 5-10% drop in the market. So you're already coming at a low entry point, so your capital is protected there. What also it does, it protects your yield, because we're pricing these things with the current trend in mind, knowing that the rentals are coming down. So this property we're acquiring for 430. It's currently rented until December at 55,000, if I'm not mistaken, 50 or 55,000, which results in 9%. And we make it very clear, like, listen, this 9% is not going to remain, because when the lease renews, it will renew at a lower rate, right? Because the rents have been coming down. But the important thing over there is, because we price this such that even if there's a 10% reduction in rent and so forth, your yield is still protected and providing you above market rent. And this is to give you some example, a track record of our properties that we've been paying regular dividends in. So the green bars are the returns that we have provided for our property, and the red is the market average in that area. So besides one property in JLT Studio, all of our assets have been outperforming the market average. And that is mainly due to us doing our job in terms of screening the right opportunity. We do more than what is required of us in terms of what our regulatory requirements are as a platform operator. Our platform is there just to connect potential buyers and investors, sellers and investors, and provide a facility where that transaction can be done. We actually go one step further and ensure that we only put quality assets. That's why we necessarily don't do a lot of volume. but we concentrate on good value. And it's shown time after time with most of our investors being multiple investors. So 65% of our investors are multiple investors. Many of you that are here have invested in many of these properties and are enjoying pretty healthy returns, even in current climate, where some of our properties have had some challenges with either tenants delaying payments or we looking for new tenants and so forth. We've been able to maintain returns alhamdulillah, which is great in this market, and we're quite happy about that, and we're happy because our investors are happy from the feedback that we get. So that's it from my side in terms of sort of giving you guys a sense of where the market is, how we're performing, how we think, why we think SmartCrowd as a concept is extremely important, and why you should continue using it and telling others as well too. There's a few questions over here. We'll take it at the end, but I'll pass it on to Hassan and Amar to take you guys to the rest of the presentation. Yeah.
All right, perfect. So thank you so much for that, Sadiq. Definitely very helpful, and I'm sure a lot of the new people, particularly who have joined the platform over the last month, found that very informative. Once again, thanks to all our recurring investors. As Sadiq mentioned, 65% of people reinvest on the platform, which is just which proves the fact that we're providing that kind of value to all our clients. So this next section, what we're going to cover is important announcements and some of the new features that we've been launching. We've received a lot of great feedback from our current investors, and we want to ensure that we keep moving the product in the direction that you intended to. So I'll first leave it with Amar, who's going to talk about a different kind of product, which a lot of our buy side or investors won't necessarily see, but it's extremely important for you to know that SmartCrowd is moving in this direction as well, so that we can provide quality assets for you. So Amar, take it away.
Hey man, can you hear me?
Yep, we can hear you.
Perfect. So I guess just to start off, just to break it up a bit, if everyone can take like 10 seconds and just stretch. That was quite a speech, very important. But perfect. So as Hassan had basically mentioned, we kind of went over what the market has done over the last 6 months. So we want to review some of the stuff we have coming up. Now, a lot of you are investors in SmartCrowd, meaning you're more on the demand side. You guys are the ones that fund the properties. But what's happening on the supply side? So how do we actually source the properties? So one thing we decided to shift our focus to is to allow you guys to also use that side. So the supply side. So if you happen to have a property that you want to get rid of, or a property that you're selling, you can now submit it to SmartCrowd very easily. Now, looking at the market, I'm sure you've all seen there's a I can't say that word. Okay.
Disproportionate. There you go. Disproportionate.
There we go. Basically, there's too much supply and not enough demand. Now, how are we going to tackle that? Basically, what SmartCrowd allows us to do is, again, sell that property to multiple investors instead of you guys having to wait around until one investor can come around and afford that property. So basically what the process is you can log into sell.smartcrowd, you fill in a form. Now, in return, what we do is we do a full valuation of your property. Now, it's an internal valuation, so it's the same valuation that we do before the projects are listed on our platform currently. Now, looking at that project, if it's something that we feel that investors would like, we would list it on the platform. Again, it will be funded for 30 days, and after that, it's sold. So really what we're doing is providing another avenue for you guys to get rid of those assets if you happen to currently own properties.
Fantastic, yeah. All right, let me go next one. So yeah, all right. So we can obviously, expand on that later as well if you have any questions. But this, Amar, were you done, or you wanted to expand on that?
No, man, go on. You already started, so it's over.
No, I mean, you told me to go on, and it was my slide, so I thought that this was my moment to shine now, right? It's finally come down to me.
No, I think this is an important point. Just speaking to a lot of you guys have been asking me when we're going international. So yeah, Hassan, take it away.
All right, perfect. Thanks for that segue, Omar. All right.
Yeah.
So, as many of you have been asking us,
Sorry?
when is Steve, let's just mute him for a sec. There you go. So, when is SmartCrowd going international? Because evidently, a lot of you have rightly so pointed out that all our assets, the ones that we present, are here based in Dubai. And of course, you'd like some more diversification. And one of the ways to offer that diversification is to offer an asset in another geography. And in this case, a market that is already well developed and mature. So we've been looking at the UK for a while, and we had plans to actually list a UK property in the first half of this year. But of course, due to unforeseen circumstances, I think no one could have guessed COVID was coming around. Unfortunately, we had to re-strategize. We had to think about our other priorities as well in the business, and we delayed that decision until further notice. We still have a goal to launch an international property, and that is before October. So it's still very much in the pipeline, so something for you to get excited about. And I think the key thing that we want to point out here is, SmartCrowd, it starts off as it's a community-based platform, right? Everyone is essentially working together towards a collective goal. And this is where we essentially need your help as well, right? To grow as a platform, because the quicker we can grow, the more likelihood we can onboard international properties, and the quicker we can execute those international properties for you as well. So to give you guys some stats, this month we crossed 10 million dirhams in assets under management, which is a pretty good milestone for a startup, of course. From our perspective, we're close to 300 investors, 300 active investors. And at the same point last year, we were at 60 investors. So that's about a growth of 400%, of course, early days. But when we went back to the drawing board, we kind of figured out what we would need to have in terms of active investors for the UK property proposition to make more sense. Because of course, understandably so, properties in the UK are a little bit more pricey, right? And so the more investors we have, the quicker we can close those deals. And so the number that came out based on our calculations was 500 investors on the platform, right? And it's not that big of a number when you really think about it, right? In terms of reaching 500 investors. We have a plan in place to do that. And as many of you would have seen an email that perhaps hit your inboxes earlier this afternoon, we launched a new feature, which is a referral program called Smart Rewards. And so we plan to use this reward system to try and grow our number base and active investors on the platform. And we'll show you just how easy it is. So for many of you, you know that we've redesigned, revamped our whole platform. Once you log in onto SmartCrowd, you can see a refer a friend button at the top bar once you log in. Once you click that, you will be taken to this page, which is our new landing page for referral rewards. And we're calling this program the Smart Rewards Program. It's super easy, very easy to understand as well. And it's a double-sided rewards program that's very rich. So what does that mean? So essentially, it's anytime you invite a friend and they invest on the platform, you receive 350 dirhams, which is approximately $100 in credit credited to your account for bringing in that friend. Essentially, you can use this referral reward towards any future investment, whether you want to use it on one investment, whether you want to save it up like you do air miles, it's really up to you. And you can save up, up to 3,000, 4,000, 5,000 points worth, which each point is equitable to 1 dirham, and eventually make an investment entirely off the reward system. In turn, when you do invite your friend, they receive 150 dirhams off, and they can use that towards their first investment. So as many of you know, SmartCrowd's fees are quite low. I mean, in terms of a 10,000 dirham investment, on acquisition, our fee portion is 1.5%. So when you really do the math, essentially your friend can come in and do a 10,000 dirham transaction for free of cost and not have to pay SmartCrowd anything, and take advantage of this whole new mechanism that doesn't exist elsewhere in the MENA region, which is quite fantastic. So how easy is this? I know I was talking to a lot of investors as well. I know Amar was speaking to a lot of investors. Vinay, if you've joined us, I don't know if Vinay has joined us, but I apologize for all the hardship we put you through sometimes in the earlier days for the referral program, but it's thanks to investors like you that we've improved this program. So what we've done is we made it super easy to invite your friends. One thing that I will mention is the Smart Rewards credit is credited to a separate wallet. So it's not something that you can take out or withdraw for cash, but it does act like cash because you can use it towards a future investment. So it's the same thing. So when you consider doing a minimum investment for 5,000 dirhams, let's say you're earning 7% on average. If you've invited a friend and they put in the same amount, you're going to get an extra 350 dirhams, which essentially does double your returns. And so it's a separate wallet, which you will always be able to check. The pending balance shows the amount of friends that you've invited. So for example, if I invite Sadiq, I invite Amar, I invite Nader and many other of my friends, and perhaps some of them are still pending in terms of signing up, then that kind of allows me to, kind of touch base with them as well and ask them, hey, if they've got any questions. Of course, if you're an investor, you can always answer those questions for them or direct them towards us. But I think the important thing here is building on that community aspect, right? And collectively harnessing and building those rewards together. So you can send it to multiple friends via email, separated by a comma, or you can even just click on WhatsApp icon. Most of us WhatsApp nowadays. So you can even use Facebook, email, whatever your preferred method of choice. Once you click, for example, WhatsApp in this case, we even auto-populate it for you. So there's a message there. Of course, you can change it if you would like to change that message. And then you can send it across to your friend. One thing that I will note, in the earlier days, there was some issues in terms of allocating a referee to the referrer, and we've solved that problem. So now when you invite your friend to use your link, essentially they have, as long as they click on that link and they register, maybe they don't complete the registration at all, but they come back after 60 days or within 60 days and they decide to complete that registration process, you will still be credited for bringing them in. So you have a 2-month window. So essentially we've worked on this with our tech team. We've worked on it day and night to ensure that you get credited for the friends that you bring in, because we understand, investing isn't one of those things like ordering, food. You're not going to do it in one go. Someone will understandably want to educate themselves, want to do a little bit more reading, perhaps ask a few more questions. So as long as you invite your friends, you have a 2-month window to get credited for the rewards when they do eventually end up investing. And so that's the ultimate message. All it takes is one friend. We're sitting at about 300 today, right? And as I mentioned, when we hit that 500 mark, we'll be in a very, very strong position to source UK properties. I mean, we can still do that today, but we feel like our business case will be even stronger in terms of closing those deals at a much faster rate for you guys. And so if you have already invested on SmartCrowd, think of it in these terms. It's just one friend. You need to bring in one friend. You're using the platform, convince them, and show them how easy it is. Sadiq already, walked you guys through the returns, the market average that you're receiving, and the returns that SmartCrowd has been able to provide. That too, particularly in this climate, and especially when you consider the fact that it's fractionalized, your risk is far less than it would have been had you tried to own that property on your own. So that's it for the presentation in terms of the new features. Yeah, go on, Amar.
Yo, Hassan, have you signed up for the platform yet? Because I'd like to refer you to get my $350.
Well, I have signed up to the platform, unfortunately. I think even if you tried to do that, Sadiq would probably get one of the compliance dudes to reject that. So unfortunately, we can't take advantage of that. But honestly, if I was able to take, I'm not just saying this, if I was an internal, I would be all over this, because this is essentially free money. And I can tell you guys, as one of the people on the marketing team, on the business development front side of things, these kind of reward systems don't come about often. I know a lot of people are probably thinking, oh, it's a marketing gimmick. Yeah, fine. All right. They're giving these rewards. But think about it. That's $100. That's very tangible. And as our platform starts growing, inevitably, we will have to reduce these rewards, because you can't indefinitely keep giving people $100. Think about it from that perspective. So the time really is right now. If people want to take advantage, get the most bang for their buck, right now is a downward market as well. It's probably one of the best times to take advantage of this offer and start inviting your friends, particularly if you believe in it yourself.
Sorry, go ahead, Amar.
No, Sid, you haven't talked in a while. Go ahead.
So, listen, obviously, it's good for SmartCrowd if we have a bigger investor base and so forth. But what I want to highlight is how this helps you. So there's a lot of questions that I've been reading, etc., that will answer by having more people onto the platform. So by having more people on the platform, what that does, it allows us to do more transactions, give you more variety, more options to invest in. It will enable us to go into different geographies, providing you further opportunity to diversify. Furthermore, it will create a bigger investor base that will allow us to create secondary market quicker, because for a secondary market where you can exit your positions if you need it, for whatever financial reasons, etc., it's important there's liquidity on the market. So once we have scale and we have more people, it will benefit you by providing more liquidity in the platform. So yes, it obviously helps us to grow our business, but it will benefit you more as well too by having more people onto the platform. So it makes sense. We don't spend a lot of money on marketing, as you probably have witnessed. We don't. It's mostly these kind of efforts that we try to get more people. It's we rely a lot on your kind words and passing it on and feedback. And just within our network, you know, we talk to a lot of people to source properties and so forth, and the word is spreading. Or people that are actually intently looking for opportunities in real estate, they find us on Google or Quora. So we don't spend a lot of money on marketing. So we're trying to do this the right way in terms of building sustainable growth by providing extreme value to our user base. And we want you to continue enjoying that and get other people to benefit from it as well.
Awesome. Yeah, no, absolutely. Speed of transactions and, you know, just getting better deals faster, quicker for everyone on the platform. So essentially that is it for our presentation right now, but we will of course take questions and answers. I know Amar has been diligently replying to everyone. So Amar, if you don't mind just, you know, picking out a few questions that you feel some recurring themes, and then we could answer them, Sadiq and us.
All right, just give me a second here.
So I'll tackle a few. Bobby was asking when are we going to mark to market these properties. So you probably would have noticed in your dashboard there is a section of sort of estimate market value. Our intention is clearly there. It's just, I'll be very honest, we haven't been able to find time to do the analysis. We're a very lean team, short on staff. But our intention is to actually not just provide you sort of estimate market value of the properties in the current environment, but also sort of provide regular market updates on the portfolio companies or properties. So you guys are well versed in terms of what's happening to your property and the surrounding area. So do allow us some time, and we will be doing that. It was built with that intention. We just haven't been able to find time to do that, as we've been sort of extremely busy with the volume of transactions we've been doing with the limited resources we have. So we hope to get to around that soon. There's another question around why we don't include purchase and transaction costs in our return profile. There's a couple of reasons, and there's a few other questions related to secondary market that is in relation to that. So the reason we don't do that, so the way we show returns is on the property price. So the returns that you get, rent minus all the expenses, divide by the property price to arrive at the net yield. And that is for a couple of reasons. One, just for comparative purposes, because the market over here sort of shows it in that manner. So just allowing people to compare apples to apples that are not necessarily very financially aptitude, for simplicity purposes, for that reason. And the second reason is the purchase and the transaction cost. So some of those costs are amortized over a 5-year period. So I'll give you an example. For example, the NOC charges or the brokerage fee and so forth, we amortize that over a 5-year period. So if you were buyer on day one and paid those transactions, and say the holding period was 5 years, and you decided to sell in year 2, it will be unfair for you to absorb all that cost, and the buyer that comes in year 2 just pays for the property price and benefits from all that brokerage fee and the setup cost that has gone into having that structure in place for him to come in and invest in it. So what will happen in year 2 is those costs that have been amortized over the 2 years will be yours, and the remaining 3 years will be reimbursed to you. Because the new buyer that's buying those shares from you will have to cover those costs because he's benefiting from that structure in place. So this way, it becomes very complicated to show that, making those adjustments to show what the return might look like depending on when you exit and so forth. So for simplicity purposes, on the platform, we don't include it. But if you had the opportunity to download the 5-year financial pro forma that we provide in that, at the bottom of that, when we provide the 5-year return on investment and the annualized return, that factors in all cost because that is done on a full 5-year time frame. So we take into account. And keep in mind, we try to do our best to be as transparent as possible. Sometimes my team really ridicules me that because I go to a whole different extreme. But this kind of feedback is very important to us in terms of how better we can communicate and demonstrate and show certain things to make it easier and clearer for people to digest. I hope that answers questions. If not, feel free to reach out to us directly and we can have a one-on-one question.
So I got a question that has popped up a couple times. Basically, they're wondering, since a lot of expats are apparently leaving Dubai, what do we think the effects are on the real estate market moving forward?
So this is not the first time the headlines like this have popped up. I don't know if you guys ever follow me on social, especially Twitter. I'm quite vocal about these sort of headlines because negative headlines, unfortunately, they sell. And there's a lot of biasness in this, in a lot of these headline numbers, fear mongering. Yeah, it's funny, my father-in-law who lives in Pakistan, my parents who live in Canada, they always call me like, oh, Dubai is going through so much problem. I'm like, Mom, the entire world is suffering from COVID. It's not just Dubai, right? So you just gotta filter a lot of this stuff out. You gotta look at the facts. A lot of people are leaving, going back to their home countries. Great, what's happening in their home countries? It's not like those home countries have lots of jobs, etc. as well too. So, and in certain places, the quality of life or safety or health issues are even larger than staying in Dubai. Yes, there are challenges for people in terms of staying over here without any income or jobs and so forth. But that's why I said this is where the opportunity is for the government over here to make some structural changes to make it possible for people to stay over here. And there are lots of programs have been put in place to support the citizen. Also keep in mind, you don't pay taxes over here, so you can't expect the same level of support that your home country would provide you where you do pay taxes in terms of employment insurance and so forth. The other thing is also you need to look at what kind of people are leaving. Yes, there's a lot of people leaving, but you got to look at their purchasing power and the impact they have on the economy. I was reading a headline the other day. Abu Dhabi repatriated about 180. I can't remember the exact number, but it was quite a large number of blue-collar workers. It's unfortunate that they have to go back, but what's the economic impact they have in the local economy? Their purchasing power is minuscule. So you got to filter through a lot of this information and filter out the noise. It's very easy to get caught up in these headlines, and that's why what I mentioned earlier. You got to look past this. You got to look beyond in terms of what the world will look like in 12 months' time, in 24 months' time, and not get scared, because by the time all these things work out, you might have missed an opportunity. And that goes for everything. It doesn't just go for Dubai real estate. It goes back to any of your other investments you're looking at, with the stock market, etc., and so forth. But that's how I look at these kind of the negative views or media. It's mostly Bloomberg or CNBC, mainly Bloomberg, that has these sort of negative headlines around this stuff. So that's my personal opinion and view on that.
Sadiq, we have another question in as well. And of course, Raid's asking, he's planning to purchase a property in Dubai. And if we can provide the level of, I guess, analysis and depth that we do provide on the platform, if that's something else that we can provide elsewhere. Of course, Raid, we'll be happy to discuss that offline. I mean, you can send us an email. I'm sure you have Amar's email as well. And
absolutely, we would be more than happy to support our users. And that's the whole idea, right? That's the whole idea of SmartCrowd. We want people to grow their wealth, get to a point where they're able to take advantage and buy properties on their own. And what we're trying to take advantage of what we have built is try to create new products, right? In this environment where digital is becoming the number one option for many people, we're looking to build products where we're not only offering our services at a micro investment level, but potentially for people that are looking to acquire entire assets in similar structures for better financial planning, wealth planning, succession planning, or just relative ease to handle everything, manage everything on their behalf. So more than happy to help people that are in that situation.
On that front, though, Sadiq, I think the follow-up to that question was, especially in light of what's happened right now with returns going down, do we suspect that returns in Dubai will match more mature markets? So kind of accelerate that process where we'll see that sudden pace go towards a equilibrium, sort of, well, like a place where you can compare more mature markets with a market such as Dubai? Or is this something you think that is likely to recover, but again, be something more like a U-shaped curve or a W-shaped curve as we've discussed in the past?
So two different things over there. So I don't think the Dubai market is at that level where you would have comparative yields to what you see in London, New York, Hong Kong, where circa 2-3% pre-tax. I think the market is not that mature yet over here. So I think there's still a considerable amount of time to enjoy single high-digit returns. But having said that, yields coming down is not necessarily a bad thing, because if yields are coming down, that means the market is maturing, meaning there'll be less volatility in the market and you will see more capital appreciation in the market. So that's important to understand that, right? But I don't see that happening necessarily anytime soon. I think you will still, I think the average Dubai yield is close to 6%, between 5 and 6%, depending how you look at it and what areas. And I think that will stay for the time being. Actually, in fact, seeing them going a bit higher in medium term as things pick up, because what people don't realize from a supply-demand perspective is there's a lot of old supply in the market that needs to come offline. Either they need to be renovated or just taken completely offline because they're just too old and inhabitable. And you're going to see a lot of migration from older Dubai into newer Dubai. And with new construction slowing down, I potentially see a supply issue, not in the immediate term, but a few years out. So I actually see prices and rentals increasing in medium to long term. That's my personal view again, right? Not the view of SmartCrowd. We don't provide investment advice. I need to be careful over here from a compliance perspective. But and your other part of the question was, Hassan, U-shape, V-shape. Hey, it's hard to tell. The way the world is going right now with certain places reopening, not managing it properly, going back down to shutdown, etc. I don't think this necessarily be a V-shaped. I don't know what letter it will be in terms of recovery. But what's important is you need to be able to navigate, manage your risks, and look for opportunities in this environment. Not acting or not doing anything sometimes is more detrimental to than making the wrong decision, in my opinion.
Sadiq, a quick question. This from Fidel. So is there any type of insurance or protection for investors who are investing with SmartCrowd?
So there's obviously property insurance on the asset itself that covers any damages or loss of the property, as well as rental loss protection due to any situations where the property cannot be rented, such as fire, etc., or So we have that kind of coverage. In terms of your investment protection, you are taking real estate risk, so you are exposed to the real estate market, whereas returns can go up or down. In terms of your capital and the legal structure, that's the reason we're regulated. So you are protected from that perspective, because each investment is completely ring fenced in a separate vehicle altogether. So even if SmartCrowd was not operational tomorrow, your investment won't be impacted because it's not on our books. We don't have any ownership on it. We just administer the investment. It's a completely separate entity that owns the property, and you guys are the rightful owners of that property. And all that information, we make it publicly available. It is available on public registers, etc., where you can go and verify that information. So we have that level of protection. If Fidel is looking for something more specific on that, you can reach out to us, and we'll give you the more details in terms of what you're trying to get to.
Perfect. So, Sadiq, talking a bit more about the structure. If you're looking at basically properties on our platform, at the Dubai Land Department, whose name is it under? And then if we're going to expand into the UK, how are those going to be structured? Are we partnering with someone?
So, good question. So the Land Department has this rule. It's recently introduced rule where any company that is buying a property. So let me walk you through step by step. So until recently, we would set up a company in DIFC. It's an SPV. Once the funding is registered, completed, all the investors that have contributed money, they get registered as shareholders in the SPV. To register every single person as the SPV, we have to submit all the documents to the DIFC on their portal, and they go through security clearance to ensure that they don't have any people. So it's a double layer of because we do a compliance work. DIFC does their own compliance work, and that's why sometimes we have the delays in the transaction process, because that process has improved a lot because now it's all done digitally. But it could take anywhere between 24 hours to 2 weeks, security clearance, because it goes to the Dubai police for security clearance. So once that is registered, we get an NOC from the DIFC. The NOC states the company name, the license name, it's a certificate of incumbency, certificate of good standing, all in one document that lists who the shareholders are, what percentage, and so forth. We need that NOC for 2 reasons. We need to give that NOC to the developer, so the developer knows who's buying the property, so they can issue their NOC. And then we go to the trustee office to register the property with the land department, because the land department needs to see who all the investors are in that property, because they care about their 4%. So in the future, if you try to transact or sell, they want to make sure that the ownership did not change, because the ownership change, they want their 4% transfer fee in proportionate. The land department has introduced one more step now, which is that company, in order for that company to transact and register the property, that company itself needs to register with the land department first. And when you register that company in the land department asks everyone's information as well too. So now this provides you even further protection. To Fidel's question, is DIFC is fully aware of who the shareholders are in that SPV, and the land department also has a record of every single investor in that property. So you have 2 government entities that know exactly who owns this property. The title deed will show the company name. The company name, if you go to the DIFC public register, you can see your ownership there. And if you were to go to the land department and ask them, hey, who owns this company, they will be able to give you that details. And the reason the land department has introduced this is this is going to facilitate secondary market, which will make it easier for us to transact shares between different individuals, because at the DIFC level, it's very easy to change shares. In the past, prior to this new step that the land department has introduced, it was very time consuming and costly to do share transfer at the land department. This enables to do it slightly quicker. We are in continuous conversation with the land department to improve the processes. So we envision that inshallah, by the end of this year, we'll be in a position where the secondary market can be really streamlined, and we'll be able to bring it to online sooner than later. To answer your question about the UK properties, so international properties, what will dictate in terms of where the structure is set up is the tax efficiency, because we're fortunate that we don't pay any income taxes over here, but that's not the case in foreign markets. So when you go invest in places like UK, you have to pay income taxes on your rental income. And in the past, there were a lot of loopholes where international owners, etc., you can, but they've closed a lot of loopholes. So what you want to do is you want to set them up in that most tax efficient manner. Does that mean this SPV will be set up in the DIFC or in Jersey or in the UK? That will be determined based on what the tax advice would come back. Based on our preliminary research and so forth, due to all the loopholes being closed out and so forth, there's no difference in whether a Dubai entity is buying a property in the UK or we're setting up a UK entity to buy a property. So ideally, we would want to keep all the companies' SPVs set up in the DIFC because that structure works. It's under common law. It's easy for us to process these SPVs because we are here based in the DIFC. If there are economical reasons for us to set up SPVs in different jurisdictions, we will do so, ensuring that the same level of protection is available to our investors, because that's number one key. And then second is if we're getting an economic benefit, then we will consider other jurisdictions. Sorry for the long, detailed answer, but it's important people understand this.
No, it's very important. Amar, do we have any other questions? Or I think for the most part, I think we have it covered.
Sadiq, can people from Canada invest, and what do they have to do about taxes?
So, sorry, I was just reading some questions. Anyone can invest on our platform. Well, almost everybody. Obviously, sanctioned countries cannot. Residents of sanctioned countries cannot. At the moment, we don't accept U.S. citizens or U.S. residents for tax purposes and reporting purposes. But international investors are available, are allowed to invest on our platform, whether they are based in Dubai or not, doesn't matter. We already have people from Canada who's invested. We actually have people from India, Canada, Germany, Italy, UK, Kuwait, Bahrain, Saudi, who have invested on our platform. So it is truly a global platform, which is exciting. In terms of taxes, you're obligated yourself. It's your responsibility to file taxes wherever you reside. If you need statements and so forth, you can reach out to us. We will provide them. As our offering expands and we start seeing more and more people from different jurisdictions, we will incorporate annual tax statements to facilitate that process. And we also have reporting requirements. So some of our international investors that might be on this call might have already received requests from Amar to provide confirmation on their tax jurisdictions, etc., because we have to provide that to their regulators. But it's your responsibility to ensure that you are paying your taxes where you should be paying your taxes.
Very well said, Sadiq. Very well said.
Shahid, we'll definitely do these more quarterly. Hassan, Amar, we got to do these quarterly. People are asking for it.
All right, sounds good.
I think last couple
Anything
of questions,
we
guys.
missed?
So it's just last couple of questions. I think there was one question. The question was, why is there a limit for 186,000? So why is there a limit for $50,000? Why is that the only amount that I can invest?
That's a good question, and a question I like because people are thinking of investing more. So this is it's a limitation that's put by the regulators, and I agree with their rationale. I don't agree with regulators on many things, but I do agree on this on their rationale over here. So the idea there is to limit risk for retail investors. So retail investor being an average investor with modest income and so forth. The idea is not to get them ahead of themselves and limit their exposure on a platform like ours. It's just to manage your risk, right? You're investing in real estate. You're investing indirectly through an SPV. It is illiquid asset at the end of the day. So for that reason, the regulators want to ensure that people are not getting ahead of themselves and putting more money than they can afford to risk. And it makes sense because you hear a lot of horror stories in the newspaper, etc., as to how people got scammed in a forex investment project here and there and so forth. So it's prudent for the regulators to put that. So that limitation is on a 12-month on a calendar period, $50,000, 180,000 dirhams. It's a lot of money. If you are able to invest that much money in real estate on our platform, you must be doing really well, and that's great. But again, going back to what I said earlier, looking at your investment portfolio, what are you investing else in, and what are your allocation in real estate? And then within real estate, how do you want to allocate that money on our platform? Have that plan in place, have it written down. If you need advice, help to sort of structure that, we are available to walk you through that, to help you understand that. But we're obviously continuously conversation with the regulators to change those limits, and over time we will address them. But if you're a professional investor who has a net asset worth of over $1 million and want to take advantage of our platform, invest more money, you can notify us. We need to sort of get some additional documentation to verify that, and then that limitation goes away for professional investors. And we do have a few professional investors on our platform that have been able to invest more than the limitation of $180,000, rather 180,000 dirhams.
Perfect. So, Sadiq, Hana is asking, basically as Dubai gets more developed and there is more of a control on supply, do you think other areas on the outskirts are going to get more developed compared to, say, downtown?
Absolutely, right? So listen, we're fair, right? We're not biased towards one thing or the other, right? So one thing Dubai doesn't have a problem with is abundance of land, right? Whether all that land is developable, can be developed is another question, but we do have a lot of land. So as the population increases, Dubai will grow further out, and it has already been going further out. That whole Dubai land project on from DSO all the way down to the DWC airport, that is all being developed. Keep in mind, you know, this city is being developed for 10 million people, not for the 3 million people that currently live over here. Yeah, so the population has grown tremendously over the last 2 decades. The last few years have been a little slow, but again, these are cycles. People will come. You know, alhamdulillah, I'm fairly well traveled, and every time I go, I used to travel quite a bit for work before, and every time I left and I came back to Dubai, you just appreciate the quality of life over here, the infrastructure. In fact, this last summer, our family went back to Canada for a very long time, and we were in Toronto, and my wife called Toronto a third world country compared to Dubai, just in terms of traffic, the chaos, etc. So we have it really good over here, right? People fail to realize that. There's actually a study done by, I think it was UBS, Amar, if I'm not mistaken, where they ranked valued, undervalued cities. I'm willing to bet and guarantee that Dubai is the cheapest of all major metropolitan cities in the world. Find me one more city that has this quality of life for the price of real estate and the price of living, right? If you look at all the major financial hubs, financial centers in the world, New York, Hong Kong, London, Sydney, any of the top 10, and compare the real estate prices there and the cost of living to what Dubai has, there's no match. But to answer your question, yes, it will expand. And we have been looking at certain areas. As you can see, our portfolio is sort of geared towards certain few areas that we like, because we see demand increasing in those areas as people looking to branch out, going to newer areas, etc. So yes, there'll be more development.
All right, last few questions here. So one of them is, you know, as a seller, if I want to sell my asset, will I be able to hold on to shares if I want to still keep a portion of that? and sell the remainder on the platform. I mean, Sadiq can probably go into depth on this, but I think the answer is yes. You can absolutely do that so long as the investment makes sense. It's an asset that we analyze. It makes investment sense for the rest of the investors on the platform. We can absolutely do that where you still are able to hold on a portion of those shares. But let me remind everyone that, you know, a single shareholder can only own 24.99% of the entire asset. And that is done on purpose to ensure that, you know, the minority interests are protected. So yes, we can do that. The other question is, in terms of SPV decision making.
Just on that one, Hassan, just on that point, absolutely doable. Just keep in mind, because the way we structure these into SPV and so forth, you will have to pass on your ownership into the SPV and then sell down the shares. So obviously there's some structuring not challenges, but we need to do that, and you will need to sort of register that, gift yourself into the SPV and then pass it down. We can take it offline if you are interested in doing that. We'll be more than happy to walk you through that.
Absolutely. Next question is, what about the SPV decision-making process? Who manages it, and the resolution on behalf of the SPV entity? So, of course, this is a question we get asked every single time. Maybe Amar or Sadiq, one of you quickly, or otherwise I can tackle it as well.
Sure. So I don't know if that was for a question from an investor and so forth. So I don't know. So if you go into your dashboard, there's a section called corporate actions. We had built out a whole voting mechanism on our platform. Unfortunately, there was a small bug in there, so we haven't utilized that. And we've been so busy with other features that have been more pressing that we haven't had a chance to go back and fix that. So the functionality is there, but we have taken the voting mechanism offline using other means, technological means. And we've done voting on a few of our properties where it came to sort of on a renewal on a couple of cases, changing the investment strategy for a property. So we don't have any discretion on these investments. So we don't manage these investments, we administer these investments. So anything that's strategic in nature, that is outside the market domains, etc., outside of our power, we usually go back to the investors, present them the options, and then get them to vote. It's a simple majority, 50% or more. The decision is made. Your vote counts in proportionate to your investment, and for that reason, for governance purposes, we don't let anyone own more than 24.99%. So you need minimum 5 people to a property, minimum 3 people to make a decision. So that's all been thought through in terms of to ensure the minority investors are not being taken advantage of.
Perfect. And we have one last question. I think this one's for Hassan, actually. So Hassan, can you elaborate on the new Jibril Network offer that we sent out last week?
Yeah, so of course, many of the investors received an email in terms of, how SmartCrowd can support itself in future raises. So this is an avenue we've been exploring in terms of raising capital as a startup, of course. And we will have more information on this. We are developing a deck right now with Jibril, so there'll be more information that we'll be able to share with you. Of course, there's information that was provided on Jibril's website as well. In terms of the specifics, when that's likely to happen, of course, I'll leave that with Sadiq. I do not believe we have a hard timeline or deadline that we've decided as of yet. But of course, that is an avenue that we are keen to explore now, since we've seen that many of you have had a lot of interest, which is very promising to see, not only that you're interested in investing through the platform, but that you believe in the startup and the vision so much that you're willing to invest into the company itself. So thank you for that. We'll be sharing a deck and some more information, and that'll be uploaded on Jibril as well. So please follow and closely watch that space.
Cool. I think that's it. Unless somebody has a question, we'll just wait a couple of seconds.
I think it was just one last one was from Mohammed. Sadiq or even Amar, one of you guys, in terms of, aside from the secondary market, what options do I have to exit my position in my investment?
Do reach out to us if you have that intention. We can try to facilitate that offline. At this stage, it will be restricted to people within the same entity. So we can facilitate that and take it offline. We've tried to help with one other individual to facilitate that. So we'd be happy to have that conversation with them offline.
Awesome. So I think that's it for questions. Of course, as always, as we've mentioned time and time again as well, real estate is a longer term investment. Of course, we suggest a recommended holding period of 5 years, which is why the majority of our investors, in fact, I mean, at the top of my head, probably like 99% of them have not exited those positions because they have that long-term view in their mind. And of course, one key takeaway for all of you in terms of homework, because we're building a community here, is invite that one friend. And we really need everyone to, kind of roll up their sleeves. And if you have been investing with us, if you are happy with our service, if you do believe in this vision that we're trying to make the world a little bit more equitable, we're trying to make this a little bit more accessible in terms of real estate assets and investments for everyone, then please do share that with your friends and you'll get rewarded. So look out for that. Go onto your dashboard, start sharing with friends, spread the word. And until next time, if you have any questions, of course, you can always reach out to Amar, Sadiq, and myself. We're available on our emails, and you can also reach out to us over social media. So that's it, guys. Thank you so much.
All right, guys. Thank you so much.
Thank you. Have a good evening.
I have to pause recording.